What is going on, everyone? It's Crypto Corner back for another episode. Today is April 10th, 2019, and I'd like to pop in today to give the general state of Bitcoin along with the total crypto markets. So if you guys like these videos, please sit back, relax, enjoy the next 10 to 15, possibly 20 minutes, depending on how long-winded I go. And let's talk about the market. So please, if you guys like these videos, please hit the subscribe button on the lower right hand side below this video. You're going to see that little subscribe button. Just click that button, and then right next to that button you're going to see a little bell shape icon. Click that bell icon, and what that's going to do, it's going to send you a notification as soon as there's a brand new video released from Crypto Corner. So if you guys like these videos, would like to see more, please by all means subscribe and hit that like button. So let's get into today's market. However, before I get into all that, of course, for legality purposes, I have to do this silliness. Disclaimer, no part of this content is financial advice. I am not a financial advisor, nor will I ever advise you what to do with your trades. This is for entertainment purposes only. Please take what you hear on this video as my personal opinion and use what you hear on this video as well as any outside source to form your own opinion. This market is very risky, so please trade wisely. Okay, silliness over, but has to be said nowadays, unfortunately. So let's look into what's going on today. So on yesterday's video, we kind of talked about what Bitcoin is currently doing. We are currently looking at the 2-hour chart on Bitcoin, which I typically don't like to look at anything on this low a time frame. However, it really helps define some areas of what we're currently trading in. So yesterday, I told you that I feel that we are in this rising wedge pattern. Okay, you can see this by, let me find my drawing tool here. Where are we at here? Right here. So we started this back on April 2nd. We kind of came up, we're kind of bouncing within this channel here, okay? And we are currently rising higher and higher. Our lows are getting higher and higher, and our highs are getting higher and higher. I personally believe that we are in a rising wedge, okay? Some people, some traders believe that we are forming a ascending triangle, which is possible if you draw it. This is all up to interpretation, guys. So it's what you guys believe has more weight than the other pattern, okay? I personally believe that we are in a rising wedge. And some people might think, so what's the big deal? Rising wedge versus a ascending triangle, what's the big deal? Well, it kind of is a big deal if you look at what pattern we are currently in and you believe what pattern we're in, okay? Because typically on an ascending, a rising wedge, which I believe we're in, most of the time, I don't know what it is, like 60% of the time, something like that, we will typically have after we go through this, as this range tightens tighter and tighter and tighter, we will typically, when we get to the point of constriction on this pattern, we will have a break to the downside, okay? However, if this is an ascending triangle, which if you go wick to wick, I can maybe possibly see that, but we only have 2 touches of this top, okay? Me personally, I like to see more touches than just 2, okay? So if you believe that this is an ascending triangle, this is how this would probably play out. It would come up, it would get tighter and tighter, as it typically is, and most of the time on an ascending triangle, we would get a break to the upside, okay? Which one's correct? Only time will really tell. Excuse me. So here's scenario 1. Let's stick with what we're looking at here. We're looking at the ascending triangle formation. If this is in fact an ascending triangle, I drew out some boxes here. Okay, we talked yesterday about these zones that I've kind of laid out, this green, yellow, and red zones. I said that I believe that Bitcoin for maybe the remainder of this year will be traveling within these zones, okay? I believe that we are in a transition phase. We are no longer in a bear market. We have not started a bull market yet. So we're going to be in this transition zone for the better part of the year. And in that transition zone, we will travel in these zones to before our next cycle begins. So we had a massive run up here on the 1st of April, $1,000 candle, which put us up into this secondary zone, this yellowish color zone right here. This zone here, I colored it yellow because it's more of a cautionary zone. There's not a ton of support or resistance in this zone. We're currently starting to build some. However, it's a little more dangerous than down in the green zone. The green zone, we were in this zone for I think like 2 or 3 months, 4 months, something like that. So there's a lot of support and resistance in this zone here that we could use as levels. And then, of course, in the red zone here, the red zone, that's a very, very dangerous area because that's getting up close to our 6,000 range. Okay, so let's talk about these potential targets if we do break to the upside, if it is an ascending triangle pattern. So once we break from this area that we are in right now, let me see if I can zoom in just a little bit here. So if we break from this area here, this is going to be the first target, would be like the 53, which we're almost there now. We're at 5,200 right now. So the $5,300 would be like the first target, which would be the upper part of this trend line. Once we break this box, our next potential target would be like the $5,400 to $5,500 range. This is the transition zone from the yellow to the red, and this is going to be an area of where there was some previous support on our way down, and I'm on the 2-hour time frame, so let me switch to the 4 so we can look at some potential levels. So you can see this red box here, this $5,400, $5,500 mark. It lines up perfectly with this congestion that we had on our way down back in the middle part of November of 2018. So this would be a first, I guess, pit stop if we were to rise, okay? So this would be a potential area of interest for potential shorts or some potential longs if we can get above this area and consolidate on top of this. Now you can see that above this range, we have a couple more targets. In this target, I have another red line here, and I kind of consider this the line in the sand, the do not cross line. I have it set like right around 5,900, and what this line here is some previous support dating all the way back from when we were falling from the 2017 fall, right? So this was our initial capitulation down to like the $5,800 mark that we had back in February, and then we also had another fall down to this level in around June of 2018. We touched again here. So this is a very, very, very strong level, okay? I expect to get a lot of rejection at this point here, but it could be a potential target. Now, let's say the stars align and the butterflies are out and the sun is shining and the dogs and the cats are getting along, and everything lines up and we happen to get enough momentum to pop through here. Very difficult, but let's say it does. The next potential target would be like the $6,200 mark, okay? And I'm going to consider this like the red brick wall. You can see how I drew my jankety looking bricks up here. I tried my best, but TradingView only allows you so much, so I tried to illustrate it the best I could, but here you go. Red brick wall right here. Now this line here, I don't really see us getting above this for right now. This level here is going to be tough to get through. This level here is going to be nearly impossible to get through. And I'm going to call it right now, this level here is going to be impossible for us to get through in the short term, okay? Short term, impossible. I guess I can't say impossible, right? Because what if it does break through, then everybody on TradingView, everybody on YouTube is going to leave me nasty comments, then I'm going to get depressed and, whatever. Just kidding. Anyway, but If we get to this level, I do not see us breaking through on our first attempt. This is going to be a very, very difficult level, because let's say we go back to the $6,200 level, and let's just look back at previous price action. You can see what I'm talking about here. $6,200, guys. This is massive, massive, massive support, as well as it was serving as resistance, support again. So this level here is going to be, it's like the red brick wall, right? Call it what you will, but this is going to be very difficult. There will be so many shorts and so many sell orders in this area that on the first attempt, there's just no possible way. If it did, I think it would shock 99% of everyone, as far as analysts and bloggers, vloggers that are in this space. So that's scenario number one. This is the ascending triangle targets scenario. We break from here. The way you would want to trade this is you would want to see a flush break of this triangle. Okay, so let's say we popped up there. You can see this white line right here. Let's say we broke it. Okay, well, there's a signal. We're going up. Potential target number one, 55. 55.21 is what it is on this chart. Number two is going to be 58. And if we happen to get above there, then 6,062, that's where I would be exiting all positions for the short term. Okay? So now let's look at the other scenario. Scenario number two. With this being a rising wedge pattern typically will fall to the downside. Okay, so where would our targets be if we broke? Again, what you would want to do is wait for confirmation. We would want to see a break of this support line, which we have used. Again, we're on the 4-hour time frame, so there's not a lot of data here. There's not a ton. So it's not like a daily or a weekly, right? So you just want to look for previous areas of support or resistance. So the first target you could probably look at is where this blue line is, 49.48. That's kind of weak support, but it is support nonetheless, right? So another area of potential support is this area right here, where we hit this area several times in the past few months. This is like the $4,200 range. You can see we used it as some resistance here, hit it again here, and this is right the area that we were at, excuse me, before we had our $1,000 candle. So it's a big area of interest. So I would see potentially a reaction from this zone. And honestly, if price were to fall down to this region right here, let's say it fell right now. Let's say Bitcoin fell right now, and we had a good old Bart Simpson pattern right here. Let me draw an eye here, and a nose, and a mouth. Man, I am really a horrible artist when it comes to this. But let's say we had a fall right now. Let's say we had a classic Bart Simpson pattern, and we came down here, and we bounced off this $4,100 to $4,200 range. Okay, came down and we bounced off of this level. I still think this would be extremely bullish for this structure. Okay, and the reason why I'm saying this is because this white uptrend line, we talked about this in yesterday's video, has been a good support line for us since back in early February of this year. We've been kind of respecting this line, this white line. So if we were to capitulate down from this area, instead of saying capitulate, if we had a sell-off that came down here, we formed a Bart Simpson pattern, which we see these often, and we still respected this line, and we had a reaction off this line, and we continued higher and higher, that would be, I think that'd be very good, very healthy. It would get our RSI back in line. It would get our indicators back in line of where they need to be. Then we could probably come up here and we could gradually start coming up closer and closer. Now, once we get closer and start winding up higher and higher, slowly and gradually gaining more momentum, then possibly we could start taking out these levels easier than if we were to try right now. Okay? So let's look at the daily. You can see, guys, on the daily that our RSI, my arrow got messed up here, our arrow on the RSI, on the daily time frame, we're at 82, okay? Anything over 70 is overbought. That's super, super high, okay? When was the last time we were up this high? Well, let's just scroll back and look. The last time we were above 80 was July 25th, and what happened on July 25th? Right here. Look what happened. Flew down. Okay. The last time it was up that high, we're at 82, right? So the last time we were up this high, we were at 94. I'm sorry, 94 back on right here. We were at 94 on December 7th. And you can see what happened immediately after that. We topped, and that's when we started our massive correction. Okay, so what I'm trying to say here, guys, is just be very careful of where we're at. You can see anytime that we're up super high on the RSI, it's kind of massive warning flags. Okay, basically RSI is, it's showing that we are way overbought and we need to pull back down. Bitcoin likes to be, see this red line that I drew right here? So this red line is drawn here for a reason. It's not because it looks cool, but it's just, it actually is pretty significant. So if you go back all the way, let's try the weekly. Yeah. So look at the weekly. Of course, the weekly time frame is extremely good data. It's better than the daily. So you can really get a good idea as far as trend on a weekly, okay? So this red line that I drew, it dates all the way back to July of 15. Of course, we're looking at the Coinbase chart. It'd probably go back further if I were to pull up the BLX or the Bitstamp chart. But anyway, you can see this red line here. It respects this range of like the 54, 5500 or 55 range on the RSI. We peaked out here. We kind of used it as support, came down here, tested again, support. And then once we broke through on our initial sell-off back in December, we came back up with it and we respected it as resistance, right? So right now, you can see where we're at right now. Let's actually expand this so you can see we are currently just poking our head up above this range here. And if I wanted to, I could probably actually draw like a box area in this range right here. So this is like an area. Oh man, what is going on here? Okay. This is like an area of support and resistance within this box here. And so our box ranges from 52 to 57. Okay, so we are currently in this box here. So this is typically an area where we get reactions within this box. Okay, so again, be very careful. Watch that area. Are looking at our stochastic RSI on a weekly time frame. We are at 100, guys. We've been at 100 since March 4th. Very, very strange for it to be that high. Now, it is possible to see this happen for a little while. You can see back here we were at close to 100 for almost a month. Okay, so it's not unheard of to see it this high for this long, but eventually it does come with a correction. Okay, so be very careful there. Let's pop over to BTC shorts. We talked about this in the last video. BTC shorts, And let's scroll in on the daily. Okay. Okay, this is actually the first time I've actually looked at this chart today. So this is the first time I've looked at it. So we talked about yesterday that this red box here is an area of concern when you see price or the shorts get down in this box area. Okay, when shorts are getting into this box, it means that the market is overly confident in Bitcoin. Okay, and that's where we typically will see reactions of sells. So as of when we were on the stream yesterday, we were currently in this area. We're currently just above the shorts. Okay, this is this box. Okay, but still, it's very, very dangerous area for this market. So you have to think opposite in this market, okay? Because 99% of people will lose their asses in these markets. So you have to think opposite of them, okay? So if shorts are low, that means most people are long, are wanting to go long in this market. Well, the people that make money in this market are the ones that do the opposite of what everybody else does. So if everybody else is going long, you want to train your brain to think, okay, I want to be opposite of what everybody else is doing and go short. We were in this area yesterday. A lot of people were starting to go long. Now we're starting to get a little bit of price action above this red box, this red area. But by all means, you can see the stochastics are heading down. Looks like we're curling around on the RSI, so we are still in this downtrend for the short market. So be very, very, very cautious there. So popping back over to Bitcoin, be very cautious in this region. I personally feel, this is my personal opinion only. Remember, back to our disclaimer here. Don't forget about that. When we come down, I believe we're going to come down. We are going to retest this area. I'm very confident that I think that we will be coming back down for a correction, because for a bear market to end, we don't have V-shaped corrections. Okay, V market bottoms in a bear market. It doesn't happen. Okay. Typically in a bear market to bull market transition, you'll come down, you'll form a floor, you may come up a little bit higher, form a new floor, and you will get some price action. The market will breathe. It'll go up, it'll go down, but you'll keep testing this area. And a lot of people, I've been hearing people, oh, I missed it. I missed the bottom. Well, you guys, I honestly believe we're going to get another shot at more bottom prices. This is not going to be, going to the moon right now. It's not going to happen, guys. We will be traveling within this zone for the better part of the year, where we're going to have more opportunity to come down here and pick up some coins at these lower levels. So let's try not to let emotions get a hold of us and we panic buy. Okay, if you look at some of these candle wicks, when we had that $1,000 wick and we see these huge wicks, that's all FOMO buyers, guys. A lot of people are in this space from the 2017 bull run, okay? And if there's one thing that we've all learned, is you cannot let emotions grab a hold of you and make decisions based off your emotions. You have to look at what's going on. Nothing will go straight up or straight down. It's not going to happen. These markets breathe. We'll have a correction. We'll come down and we go up. We may come all the way down. It just takes time. These are very fluid markets. So just be cautious on what you're doing. If you find yourself getting worked up, okay, if you see price action going up or going down and you feel yourself starting to get that panicked feeling, okay, you're already making if you start to make a buy or sell in that moment, you already know you're wrong. Okay, when you buy or sell, this should be almost like a business transaction, almost like you're going through the drive-through at your local McDonald's or whatever, and you're trying to decide on the double cheeseburger or the single cheeseburger meal, right? It's like no big deal, right? I don't know if that's a very good analogy or not, but oh well. You guys know what I'm talking about. You should not get yourself worked up over this. Okay, there are going to be lots and lots of opportunities in this market to make money. Don't if you get ready to sell or you get ready to buy and you find your heart racing and you're kind of sweaty and you're shaky, then stop. Don't do anything. Walk away, think about it, breathe, watch some other YouTubers, read some posts, don't watch the news. Whatever you do, do not watch that news. That news is toxic. Don't be on Reddit. Don't be on any of that garbage, okay? Because all that is Reddit is full of FOMO people that, a lot of people know a lot about the technical stuff and fundamental stuff in there, but make a decision based on what you feel. And when I say feel, I don't mean as far as your emotional feeling. I don't know. Does that make sense? Don't make it based on emotional, but just based on your logic. If you see it going up, like me personally, there are so many people that are calling this pattern here the ascending triangle. Not very many people are calling this an ascending wedge. I'm kind of against the grain on this, so if it breaks to the upside, then I'll know I was wrong. No big deal. I'll find another level and I'll short or sell or whatever the case may be. There'll be so much opportunity to make money in this market. You don't have to catch every single one. Does that make sense? So anyway, this video is probably about the 15-minute mark. I don't even know anymore. But so I will post again. I'm going to hope to get on maybe tomorrow, and maybe we'll have some resolution as far as what this pattern is. And if we do happen to start going down, I actually even set myself an alert. This little dashed line in here is an alert that if it crosses 48.91, because I'm the type that I try not to be glued to my phone or be glued to the computer. Okay, if you are the type that you're looking at your phone every 40 minutes, 30 minutes to check on the prices, then you're becoming too emotional. Okay, unless you're like a full-time scalper trader, whatever the case, then okay, I get that's what you do for a living. But if you're just buying and selling on the side, which I would say probably 80%, 85% of people are, then don't get too emotionally involved in this, because when you see that price drop 5%, 10%, that's when you're going to start making bad decisions. And that's why I never recommend going in anything lower than the daily 4-hour maybe. But you start getting into these 5, 15, 30-minute candles, 1-hour candles, guys, you're going to see a huge red candle and you're going to panic sell or panic buy. And when you zoom out to the daily candle, you realize, oh man, that was only a 5% move. But when you're zoomed in on the 15-minute chart, it looks massive. So be cautious. Try to make this as stress-free as possible. Set yourself some alerts. Maybe set some alerts on your phone through Binance or TradingView or whatever the case may be. Don't stress yourself out. You'll make bad decisions. And try to tell yourself, you know what, I'm only going to check in on this once a day, twice a day. And try to, there's a guy that I know that trades, and he started off trading scalping. And he was telling me how it was very hard on him, physically and emotionally, right? So now he wasn't trading the crypto, he was trading other markets, stock markets and such, but that it was very, very stressful because you're glued to the computer, you're glued to your charts, you're glued to your phone, and it was stressful, right? And he said over time, as he gained more experience, that he started looking at longer swing trades and day trades. And now he's at the point now, he goes, I might be in a trade for a week or a month. He goes, it just depends on, what it is. And he calls it the lazy river approach. Everybody's been to these water parks, and you know what the lazy river is. You grab the inner tube, you hop in the river that flows you around, and you just sit and relax, and you just enjoy the ride, right? Until you get those little kids that keep bumping you into the wall and splashing you when you're trying to relax, right? But anyway, that's beside the point. Take the lazy river approach. Find a good entry point. Maybe, maybe a good point would be is if we come down here and we get to this region right here, maybe you either buy some longs here or buy some positions right here, and you just ride it up. And maybe you tell yourself, you know what, I'm not going to sell till we get up to this $6,000 region. And then I'll sell, and then we'll come back down and maybe find another support level in here. Or maybe, you know what, I'm going to buy down here or in this region anywhere, and I'm just going to ride it up until we potentially make our new top in our next bull market. Lazy river approach. Dollar cost average in. Maybe that's an easy way to do it. Maybe you can just set some buys. Tell yourself, I'm going to buy so much Bitcoin, Litecoin, whatever the case, whatever you're into. I'm going to buy so much every single week. I'm not going to be catching the tops. I'm not going to be catching the lows. But you know what? I'll have some for when the next bull market occurs. That's probably honestly the easiest way to dollar cost average your way into your positions. Maybe have a little bit on the side, maybe have a little nest egg off to the side to where if prices get really low, let's say like right now you're dollar cost averaging in right now and price falls way down here, back down to $3,100 range or potentially lower, then maybe you can take your little nest egg you got saved up and dump it in, and now you got some really good positions. But you continue to dollar cost average in every single week, every single month, whatever you decide. Try to make this as stress-free as possible, because once the stress comes in, that's where the emotion comes in, and that's when you're going to get yourself in trouble and make bad decisions. So anyway, my therapy session's over for today. I hope you guys enjoyed it. I will be billing you accordingly, so please make all checks out to Crypto Corner. But anyway, so with that being said, guys, I will see you guys in the next video. And hopefully you guys enjoyed this. If you guys have any comments, please leave them in the comments below. Let me know what your guys' thoughts are. And let me know what your guys' trading styles are. Are you guys swing traders? Are you guys day traders? Are you guys scalpers? I know a lot of people that are scalpers. They make a lot of money. But you really have to know what you're doing, and you have to really have your emotions in check when you get into that type of time frame. So anyway, let me know what you guys' thoughts are. Would you guys like to see anything different in this video? Do you think I'm full of BS? Yeah, let me know. Let's talk about this. So anyway, until the next video, you guys have fun, stay safe, and happy trading, everyone.